collapse that reverberates. Iran's banking woes take center stage. On a crisp autumn day in Tehran, a building once symbolizing ambition and private sector success stood quietly under the shadow of reform. There, the story of Ayandeh Bank, once among Iran's largest private lenders, has drawn back the curtain on persistent economic fault lines in the Islamic Republic, corruption, political patronage, and mismanaged financial risk. With the bank's dissolution and integration into the state-run Bank Melli Iran, the event is not just a banking story, it's a window into Iran's broader macroeconomic turbulence, regulatory failures, and political power games. From private ambition to state takeover. Founded in 2013 by the merger of Tat Bank and two state-linked credit institutions, Ayandeh Bank was backed by one of Iran's wealthiest families and rapidly expanded into banking, real estate, and large-scale projects. Al Jazeera. It wasn't simply a finance house. Its parent group had steel, telecoms, hospitality, and even a board seat in this country's major football club. Al Jazeera. But behind the glossy storefront lay a troubling reality. The bank's capital adequacy ratio, CAR, plunged to a shocking -600%, meaning rather than having a buffer, it had massive negative equity. By comparison, international norms such as Basel II require a minimum of roughly 8% to be considered stable. Al Jazeera. To prop itself up, Ayandeh borrowed heavily from the central bank and government, extended massive loans to insiders, and held enormous non-performing assets. Al Jazeera. What went wrong? Corruption, privilege, and systemic risk. Several key factors coalesced to create the crisis. Insider lending and weak oversight. Ayandeh was legally allowed to issue loans only up to 200 trillion rials, yet regulatory data showed it had given roughly 10 times that amount to individuals and firms linked directly to the bank's ownership or internal projects. Al Jazeera. Over 1.3 quadrillion rials were loaned to a small, inner circle, and thousands of depositors and stakeholders were left unable to withdraw or recover funds. Al Jazeera. Regulatory breakdown and patronage finance. Experts warned that many Iranian banks carried large volumes of non-performing loans, NPLs, because loans were made without the due process of assessing collateral based on corrupt transactions between networks of power. Al Jazeera. In effect, the private bank became an instrument of political and economic patronage, not rigorous financial management. Macroeconomic spillover. The losses piled up such that the central bank reported Ayandeh represented 42% of all overdrafts from the central bank and 41% of capital imbalances across the banking sector. Al Jazeera. The state now faces the burden of absorbing this debt, estimated in the billions, and real estate assets such as the vast Iran Mall in western Tehran, a shopping complex built by the bank's parent group. Al Jazeera. To cover these, the state risks printing money, a major driver of inflation which in Iran is already above 40%. Al Jazeera. Political theater, and where power intersects with the economy. The dissolution announcement came shortly after the country's judiciary chief publicly challenged the central bank's governor, threatening legal action if decisive steps were not taken. Al Jazeera. In turn, hardline political factions, state media, and the Islamic Revolutionary Guard Corps, IRGC, portray the takeover as a triumph of governance over private excess, but it also served as a way of undermining rivals in the reformist/business technocrat camp. Al Jazeera. One parliament speaker described the move as a great success for the country's decision-making and governance system. Al Jazeera. In short, the crisis is as much about political optics and power consolidation as about economics. The ripple effects. Who pays and what comes next? While depositors were told their accounts remain secure and contracts unchanged, the economic pain will likely filter downward to ordinary Iranians. Al Jazeera. Real estate assets under state control may take years to be liquidated. Meanwhile, the burden of losses, with the state estimated to absorb about 2/3 of the debt, will be borne indirectly via inflation, higher prices, weaker currency, and slower growth. Al Jazeera. Inflation already surpasses 40% amid renewed UN sanctions and broader economic strain. Al Jazeera. So while the private bank's failure may seem remote from everyday life, its consequences are not. They reach into household budgets, food prices, and the public's financial confidence. A cautionary tale and a structural challenge. The story of Ayandeh Bank is far from unique in Iran's banking history. At least 5 other lenders have been flagged as highly imbalanced. Al Jazeera. It highlights 3 wider themes. The dangers of mixing politics, business and banking when oversight is weak. The systemic vulnerability of banks and economies under sanctions, with limited foreign access, high inflation, and strong state intervention. The long-term cost of bailouts, and the way taxpayers often foot the bill for misgoverned institutions. Conclusion: risk, reform, and what lies ahead. When a major commercial bank folds into state control, the headline grabs attention. But the deeper significance lies in what it reveals: a banking sector stretched beyond its limits, a regulatory system compromised by patronage, and an economy where the private and public sectors blur in complex ways. For Iran, the dissolution of Ayandeh Bank offers a moment of reckoning. Reform is needed, but whether it occurs in earnest or simply serves political theater remains to be seen. As ordinary Iranians face higher prices, shrinking purchasing power, and institutional uncertainty, the true measure of change will be whether their confidence